This week, we're talking restaurant performance, land values, and we'll take a look at jobs data. Welcome to the Weekly Livestock Market Update on Brownfield. I'm your host, Meghan Grebner. With us is University of Missouri livestock economist Scott Brown. Welcome back.
Glad to be back, Meghan.
It's been a couple of weeks since you and I have gotten to chat face to face, so I'm very happy to see your smiling face this Friday and look forward to what we're going to talk about.
Yeah, just sorry I get to come back for a week when we tend to be talking about lower livestock prices this week, but it is good to be back.
And we will get into that as well, and plus we'll preview next week's monthly trade data. But to kick things off, let's recap what happened this week in a not so great week in the markets.
Yeah, we'll start on the cattle side this week, Meghan. Live fed cattle down roughly 50 cents this week. The feeder cattle market was really kind of all over the board. I call it down $4 to up $4 for the week as it was searching for the right price, I guess, for the week. When we look at the futures side, the October live cattle futures contract was down $6.60, and the September feeder cattle contract was down $11.60 on the week. So tough week on the futures market. That was in spite of the fact that we lost 7 3/4 cents on the September corn futures as well. Choice box beef prices were roughly $1 higher this week. We've been kind of hanging in that $3.15 range for a while now. On the hog side, cash barrels and gilts, they were $1.35 higher on the week. The October lean hog futures contract, though, was down $1.60. We gained on the pork cutout value. It was up 70 cents this week. Stronger bellies really led the way on the pork cutout value.
It's really been interesting watching the markets the last couple of weeks. And I would assume, and correct me if I'm wrong, when we're up this high, anything can kind of maybe take the shine off those prices a little bit. And it shouldn't be too surprising if we see markets pull back and kind of go in this back and forth game a little bit between up and down.
I tend to agree here with you, Meghan. I don't think the fundamentals have really changed that much in the last couple of weeks in terms of cattle numbers. They continue to be talking about tightening cattle numbers, maybe a little more pork production coming in front of us. But generally, we've got some not so great, I'd say, general economic news this week. Talk jobs here in a little bit, but I think on the cattle side, it doesn't take much to get that to tumble down. But again, I'll say fundamentally, I don't know that market's changed. So we'll see what happens here in the next week or two and see if we get some recovery as we've tended to be doing as we've gone through 2024.
Now let's take a look at those weekly slaughter numbers as we take a look at both cattle and hogs.
Yeah, so USDA tells us for the week ending August 3rd, a run of 593,000 head of cattle this week. That's 7,000 less than we did last week and 22,000 less than we did a year ago. On the hog side, a pretty big run on the hog side this week, 2.455 million head, 19,000 more than we did last week, and 107,000 more than we did same time a year ago.
When we take a look at these year-to-date numbers, how are we faring in 2024 compared to where we were in 2023?
Yeah, on the cattle slaughter side, we're down 4.4%. We've kind of been in that 4 to 4.5 range for much of this year. And on the hog side, we're up 1.2% year to date on hog slaughter.
I think it's really interesting. We're talking about a pullback in cattle slaughter numbers, but when we look at beef production, like we've been talking about, those weights really are helping to make sure we're still having high beef production overall.
Yeah, so absolutely. I think you look back at what USDA would have been suggesting for 2024 beef production back in mid-2023, and they would have been calling for a much larger cut. I think a lot of us wouldn't have disagreed with what that forecast was looking like. It's amazing how things have changed. I'll say, let's not forget that we also have seen corn prices move much lower and talking about now feeding 425 corn, I think it changes the interest dynamics of how quickly we want to move those cattle to slaughter. And so all that's played in. And on top of that, you look at trade. Um, we're exporting less beef. We're importing more beef. All those things in net have made the impact on an average consumer a lot less than maybe we would have thought earlier as we think about how this year is unfolding.
Scott, as we get into this week's reports, first one we will take a look at restaurant performance numbers, and really not showing any growth or super positive news there.
Yeah, that's right. So the June 24 overall restaurant performance index was down 0.2%. It's 98.9. This is the index that when it stands below 100 is in contraction. A long-term view here for a minute. So you back up to the beginning of COVID, and we were talking about 95 as the overall index in the early days of the COVID-19 outbreak. By mid 2021, we were talking about 106. So we got pretty tough down, and then we got nice recovery. Ever since then, of that 106, we've just been heading lower, and as we've gotten further into 2024, we've continued to see contraction. So 7 straight months of below 100 in that overall restaurant performance index. The current situation's been tough. There, I look at things like customer traffic. So the customer traffic portion of 95.6 continues to show downward movement. So certainly there's some things to be watching on the demand side. And even on the expectation side, there's a lot less optimism than we would have seen a few months ago. One note out of that report, only 28% of operators expect their sales volume in 6 months to be higher than it was during the same period the previous year. That's pretty low relative to what we've normally thought about. So again, I don't want to make too much out of what's happening, but there certainly seems to be some concern here that we'll have to watch as we look ahead.
When we talk about that demand and kind of how restaurant performance ties into demand overall, does that change your outlook? Does it maybe, are you watching a little bit because demand just has been so crucial for beef prices to maintain, especially as we're looking at, potentially less production in the future, right?
So, yeah, you asked a good question about whether it's affected my outlook. I will say, I think it's turned the dial a little bit in terms of maybe a little less optimism. Again, I think these markets, when they're at these lofty levels, are always looking for correction. And if demand were to slow, given markets this week, general economic markets, the recession word came out. Well, it wasn't a couple of months ago. We weren't certain we were going to get an interest rate cut this year. That's yet to be determined. But this idea that the general economy could be slowing, consumers not as interested in spending, certainly is one we want to keep our eye on. I don't want to say it's a light switch that was on strong demand and now it's going to be off. I don't believe we're there. It's just, where are we going to be between the on and off position? And we could look up in a couple of months. We get a 50-point cut in interest rates. It could push the economy to grow stronger again. So I don't want to call anything too weak at this point, but we want to pay attention to what's going on here. It's been a trend that's been underlying this market for several months now.
Land values out this week. I'm just going to we're going to go from consumer demand to the production side of things. As we take a look at land values from USDA, are you surprised to see the numbers where they have them?
So I'm not surprised to see more up happening. I think we are slowing the rate of growth a little bit at this point. U.S. cropland value, just for a few numbers to get us started, the USDA says $5,570 for U.S. cropland values across the country, 4.7% higher than 2023. For me, the interesting piece, those are 37.2% higher than where we were in 2020. That's some very nice growth, with crop prices generally moving lower. I think it gets harder and harder to suggest that these cropland values can be supported by current corn and soybean prices. There is variability. I find it interesting, the Southeast, so Alabama, Florida, Georgia, South Carolina was up 7.2%, leading the regional growth, if you will, where Delta states, Arkansas, Louisiana, Mississippi, up exactly 4%. So there's some variability in what we see there. Corn Belt up 4.5%. That's the I states in Missouri and Ohio. So interesting. Now you move to pasture land, where I think stronger cattle returns have maybe made pasture land values go up. So they're up 5.2%, according to USDA 2024 relative to 23, up 30.7% since 2020. Also very strong growth. Here's one where you look at the lake states of Michigan, Minnesota, Wisconsin, they were unchanged 23 to 24. To the Southeast, again, up 10.6%. So a lot of difference as you move around the country in terms of some of the regional impacts, but at least everyone was steady to higher. I think if we see crop prices continuing to either stay flat or move lower, that we could look a year from now and be talking about perhaps some lower land values.
I am fascinated by the jump in pasture land prices in general. So as a girl who's trying to buy some pasture where we live, it's not easy, and availability is scarce also. And I would assume that Kentucky is not an oddball story in that situation.
Yeah, so to all of this, I think this notion of, if I want to get into farming right now, one of the major hurdles is the needed cash to make the purchase, to get in. It's hard. So barriers to entry. How do you get beginning farmers started? That's a very tough story to try to dissect, but I think it's important for us to be thinking about it. And I think as we look ahead, we're going to see it becoming harder and harder for folks with no history of farming to get into the business. There are downsides to that, of course, but certainly seems to be more and more of where we're headed.
Finish up today. I'd love to say we're going to finish on a positive note. We're not. Jobs report out this morning. And this is probably been the most negative jobs report we've seen in recent months.
Yeah, certainly didn't help the tone of markets to jump off here. I think if we would have had this without some of the other issues, perhaps that would have led us to say, hey, interest rate cut is more likely to happen. But we added 114,000 jobs in July. That's what we got out of the report today. That made the unemployment rate edge up to 4.3%, the highest total since the pandemic era. Economists were suggesting 185,000 jobs in July. So, and we've been averaging right around 200,000 over the first half of 2024. So it's quite a well off of what we would have anticipated. Um, maybe some of the, well, I don't know if I want to even say good news here, but when you look at average hourly earnings, the growth in those average hourly earnings continue to slow. 3.6% over the past 12 months is what we got out of this report. Perhaps that's another signal that these high prices are starting to really have some impact in terms of overall economic outlook.
I am going to ask you a question, and maybe this sets the stage for us to talk about in future weeks. We've seen a lot of equipment manufacturing jobs get cut. That's been, I'm going to say, probably one of the top stories in the last 6 months. When we see what's going on with farm income, we see what's going on with commodity prices. When you look at these types of cuts, do you think this is a more cyclical move, or is this reactionary to just what's going on in the overall ag economy?
Well, so I do think we're headed into a tougher economic period than we've seen for a while. I think you have to go back to 2018, 2019 to find another time where I think things were starting to get really tight. I think input costs continue to be fairly high for producers of almost all our commodities. Labor stays high. Although we, from a livestock perspective, can talk about much lower feed costs, all the other costs, vet medicine, you name it, all those costs have stayed high. Hard to push, I think, hard to get those to move lower. So now we're going to perhaps be in a period of, this is all about who can produce the most efficiently at the lowest cost. That's a hard one as well, because you have to worry about, am I giving up yield potential to get cost lower? And what are those trade-offs? I think one has to think through where you can cut and feel okay. Yes, machinery's certainly been at the top of that list of things where folks have been willing to hold on to machinery that in the past, recent past at least, they've been willing to trade up pretty regularly. So I think, we're going to have, on the machinery side, I think we're still in for a tough period of time. It'll eventually turn around. It'll take time. For me, the bigger issue is, looks like we're going to have fairly good crops this year, fairly big crops. We'll see what USDA gives us in the WASDE report coming out here mid-August, but we could continue to put some pressure on crop producers that they haven't seen for a while. And so it's just a different perspective. And for those producers that have been aggressive the past 3 or 4 years, it's paid really well for them, I believe. But now may be the time where buckling down a little bit may be prudent if we continue to see net farm income moving lower. So we get a new net farm income estimate from USDA here in August as well. 116 billion was what USDA said back in February. If I think about just where commodity prices have gone since that February estimate, I'm not going to be completely surprised for USDA to have lower farm income come mid-August as well.
Plenty for us to talk about in the next weeks and months, Scott Brown.
It never ends, Meghan, right? So it will just be the next thing. These markets never find steady state, never will find steady state.
Isn't it like is it a thing where, like, obviously things happening and being able to analyze and look at this as an economist, it makes it interesting. But is it much better if, like, markets were boring, like if politics were boring, right?
So, you make me think back to the 1980s, early 90s, and we knew prices fairly well. We were running government programs in some cases that took a lot of volatility out of markets. We don't have those same programs today. We got more volatility. I say, think about fed cattle that wasn't that many months ago. We were talking about $1.25, and now we're talking about $1.85, $1.90. We were talking about $7 corn, and now we're talking about sub $4 corn. Those are big moves. The economist in me always wants to say, I think that the demand for these commodities has become much more unresponsive to price. So we're getting this small changes in supply giving us much larger ranges on prices. Volatility is good when you hit the highs. And so marketing becomes much more important when we talk about this volatile situation that we're in. It's an amazing time to be trying to do market analysis. It changes pretty rapidly.
Most definitely. Scott, next week, monthly trade data, pretty slow week for us. What are you watching most?
Well, I think number one, we'll get more beef imports. We're still after lean beef, so I don't think that's changed since I've been gone. Number two, I'll be surprised to see us export more beef out of the U.S. So I think those trends will continue. Curious to watch pork exports out of the United States. We had a nice start to the year, kind of slowed of late. We're going to get some growth back. Some of the weekly data might suggest to me places like Mexico picked up a little bit again. So we'll see what we get, but those are the big ones for me to watch out of monthly trade data.
Well, we look forward to chatting next Friday.
Sounds good, Megan.
So we have our weekly livestock market update delivered to your email box every Saturday morning. Go to brownfieldagnews.com. You can also submit questions and comments if you'd like. And for a daily rundown of what's going on in the commodity markets, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner for Brownfield.